You are constructive on these markets, tactically bullish. Do you see this breakout that we seem to be seeing in 8 shares, do you see that being sustained in the near to medium term?
Yes, hi, morning, and thanks for having me. We are bullish overall on the equities and on the performance of equity stocks over cash and the bonds, because we think that we are still in the early stage or starting point of the multi-year expansion. Also, China's growth rate has been gradually slowing down, may have peaked in Q1, but we can see continued, for example, economic normalization and gradual economic open up, given the progress with the vaccine implementation. So that's why we see that it could be sustained.
When it comes to the currency, of course, it's taken a lot of headlines over the last few days, the action by the PBOC and ex-officials to try and cap the gains that we've seen in the Yuan. We know that the correlation now between the CSI 300 and the Yuan is near its highest in 7 months. How closely are you watching the currency, and is there a level at which, if it continues to strengthen, it changes the way that you're positioning?
I think the currency appreciation is on the background of the dollar weakening. Basically, I think the whole market is on the risk-on mode, which is a good sign for the global market sentiment. So not only the Chinese authorities, but also many other countries in emerging markets, in advanced market, they also see capital inflows and also currency appreciating against the dollar. So it's not only the China's issue, and we see the government has issued a number of policies increasing, for example, increasing the FX, the reserve requirement by 2 percentage points for commercial banks a few days ago, and we see some modest weakening of the fixing this morning. So I think the government has been aware on the currency appreciation, on the impact on the economy. For example, they could be very negative for exporters. But overall, we see limited downside or limited further room for appreciation given these kind of policies.
Right. And to your earlier point, the basket's also at a 2016 high. So, one could argue that there is incremental strength that's also coming through in the currency. I guess the follow-up question to that, Shengzu, is direct intervention still something of a tail risk, or is that something I should consider more and more now?
Overall, I think China's FX regime has been more and more flexible. So I think the direct intervention is going to be a tail risk rather than a base case, unless there's a sharp appreciation or there's a large capital inflows they have seen, for example, back to 2010 in the last decade, which happening at the beginning of the global financial crisis. I don't think they're going to do direct intervention, given the current mindset and also the recent comment by the PBOC policymakers.
And the rate differentials, that's what markets are talking about right now. When it comes to the strength in the currency and just that allure that the yuan gives you compared to where you go, what you get in other currencies, do you think that rate differential actually then, in a large way, actually stops or slows the tapering that we're seeing in China, because that puts upward pressure on rates?
Well, the rate differential, it has been a quite long time that the rate differential supported the renminbi strengthening. But going forward, I think the overall, with the pickup inflation in the U.S. and also the accelerated economic recovery in the U.S., the rate differential could be a drag, or at least some less impact on the renminbi dollar exchange rate. And also, in terms of the U.S. economic momentum, is accelerating rather than moderating compared with China. So I think the upcoming talks on Fed tapering, also maybe a year from now, or the upcoming Fed rate hikes, the talks by the Fed officials could also have some impact on the market sentiment, on the rate differential, in particular on the expectations.
When it comes to the trade, the rotation trade to cyclicals and value, which of course has been in play for a number of months now, you think there's still room to run there? How much longer?
Well, it's a very tough question. We have been calling for sector rotation for a while, because as we mentioned, we are still in the initial stage of the economic recovery. So that's why those value stocks or pro-cyclical stocks should catch up with those growth stocks, which has been outperforming in the 2020. But it's quite data dependent, and also depending on the stage of the economic recovery. Until we see the peak of the U.S. quarterly growth rate, we won't make a call that the sector rotation has coming to an end. I'll put it this way.
Okay, and to be a little bit more specific as a final question there, Shengzu, would that be the first thing that you're tracking to get an indication of that future switch? Because by the time it's obvious, that switch has already happened and you missed that rally.
Well, just like taking one step back, we think that for over the medium term, stay invested is always our most important strategy. So we don't care too much about sector rotation or the weight change between value and the growth stocks, as long as we have a very balanced coverage on the index itself. So that's why we put more focus on the index and also stay invested in terms of advanced market equities, because we are still in an upside trend. Yeah.